Every collaboration starts with an introduction, a moment in time where the stars align at the right place, at the right time, and with the right people. It's the connections we make with one another that form the foundation upon which we build our future. Put simply, it's the start of something new. And when we take those first steps toward positive change, toward our hope with care, not nearly as important as those who walk it with us. No matter the end goal, the trust we choose to put in others is the biggest investment. We are stronger together.
Good morning to all our guests online. We are streaming live on various channels, and I am very aware that there are a number of people from Botswana joining us online, so also welcome to you. This is Capnice present here today, Bank Windhoek Chairman Johan Swanepoel, and we also have the Managing Director of Bank Gaborone here with us, Sybrand Coetzee. So, Tinus Prinsloo is the Group CEO of Capricorn Group, Baronies Hans, the Managing Director of Bank Windhoek, Johan Maas, the Group CFO of Capricorn Group, and Zenani Kamberipa, the CFO. We will start off with Tinus just sharing some information around Capricorn Group's strategy, and then we will go into the financial or comments. And with that, Tinus, I hand over to you.
Johanni will probably just put up the notes just now. But it's a real honor for us to be able to share with you the results. We've had a slight timing difference in the normal cycle, where we announced it on Wednesday already, and only have the presentation today, so around the strategic choices. And this clicker also doesn't want to move, so if we can just get the technical aspect sorted. Apologies. Anyway, I think whilst we're just sorting out the technicalities, and it's part of the, there we go, and Johanni, that process, and make it an enjoyable experience for all. Our second strategic choice is we will grow through entrepreneurial action in order to contribute to a sustainable organization. But part of this is that we, in December 2020, so it was in the holiday period, Payo Finance in Botswana. And we expect to achieve very similar impact from Payo in the next few years to what Entrepo has done for the group. Entrepo was... Bank Windhoek focuses on selected... The bank also grew its government finance portfolio exponentially, and by offering point-of-sale solutions for the first time in that market. And the bank has also revised its scheme lending proposition and operationalized the new SME customer value proposition and select gold customer value proposition. And then, although it's still small, Capricorn Capital has also contributed with a healthy profit this year. Combined with our sustainable growth ambitions, we also acknowledge that no company is an island. And we exist at the center of a complex ecosystem of mutually beneficial relationships. We create value through our strong financial performance, and this is shared amongst all our stakeholders where we are meeting today. And that created income earning opportunities for many local businesses around, and a lot of them are pandemic. Many businesses suffered losses, and many jobs were lost, especially in the construction sector. And with this project, we made a positive impact by securing and sustaining jobs, which in turn stimulated the local economy. When others were cutting capital, Bank Windhoek is implementing a D&I plan, and this plan includes the focus across its business units.
This year, and I do believe this is funds that our governments currently desperately need to help fund their COVID deficit that was built up over the last 2 years. We also, mainly through the Capricorn Foundation, but also through various CSR projects of the subsidiaries, committed 15.4 million to the communities, and that is 100% social work that was done during the financial year. Also, almost a 27% growth year on year. Then, for those of you that are shareholders, the dividends that was paid, 354 million, that was paid during the financial year. That's an increase of 72.5% over the previous year. That was mainly, a lot impacted by COVID. And then, yeah, we can't pay out. We need to also retain some funds as well for future growth and expansion. And the 928 million is what we kept back for that purposes. Looking at the trends, so I specifically put on from 2019 to 2022. So 2019 being the pre-COVID period, 2022 and 2021 significantly impacted by COVID, and I think 2022 is really the year that we came out of the shadows of COVID-19. So to highlight, if you look at all the numbers in the 2022 column, every single number in that column is better than what was in 2021. Now, we don't normally like to grow in spikes. We like to grow in a sustainable, consistent manner. But I do believe we need to celebrate the short-term success that we had coming out of the shadows of COVID-19 for the current financial year. All of the numbers are also better, except for the top two ones, than the 2019 numbers that was pre-COVID. So I'm not going to go into too much detail because all of these this detail can be found in our report that is available online. Looking at our diversity, so where all of our profits are coming from. So still the majority of our profits coming from Namibia, with Bank Windhoek being the leader at 67%. Entrepo did go down a bit in the current financial year, mainly because of a strengthening of Bank Windhoek in the current year, and not so much with them going down. But they also had the challenges in the current year where the market has been severely capped, and there is some strong competition for new loans. And then CAM and CUTM that also contributed about 6% to the group. Then Sanlam, Santam, and Paratus had a combined contribution of 5%, which did decrease significantly from the 9% in last year. But we do need to note that there was a significant losses that were suffered, especially on the life side, that is pertaining to the third wave of COVID-19 at the start of the financial year. And previously, this amount was disclosed as part of the Namibian profits, but seeing that Paratus has expanded quite significantly outside of the borders, we thought it prudent to show this line separately going forward. And then let's not forget our brothers in Botswana that also contributed 6% to the profit after tax. Now, the next slide, I think, is a very interesting story with regards to what happened during COVID-19. So on the board currently, we have the trend in what the profits did from before COVID up to 2022. And as you can see there, in 2020, significant downturn, mainly from COVID-19, and then we sort of slowly stepped up last year, although still below the pre-COVID levels, and then just shooting up significantly in the current financial year. But what I would also like to highlight is that in the 2020 financial year, it wasn't only COVID that we had. We were also preparing Cavmont for the sale, which was concluded towards December of 2020. So there was significant losses that came through as a result of that balance sheet cleanup that we had to do in that financial year. I'm not going to go into too much detail on that because it was very well documented in the 2020 reporting. But interesting to note, if we remove those losses, the story looks like this. And there you can see there's a big difference as to what was actually coming from COVID and what the subsidiaries that are still in business did. So COVID didn't actually decrease growth for the Capricorn Group. It stunted the growth a bit. We actually flatlined during that period. And that is mainly as a result of the diversification that we have within the group. Because every single subsidiary in the group suffered their COVID consequences at a different time. It wasn't all the same time. Bank Windhoek, for example, when the lockdowns hit, they had a significant downturn, and their profits looks a lot similar to the blue line that is presented there. But during 2020, companies like Entrepo and CAM really carried us through that period and really cushioned the blow of COVID-19. And that allowed us for Bank Windhoek to then recover, and now we are seeing a good increase in profits again. So I do believe it's a very nice share to have during times of these type of circumstances like COVID-19. All right, let us move then on to the details. As in previous years, we look at our results in terms of the key financial pillars, which you can see on the screen now. So I'm going to focus on the profitability first. Our margins still remained under pressure during the current financial year. We are seeing interest rate increases coming through, but that was towards the latter part of the financial year. But still, we were able to grow this line by 3.6% year on year. That's mainly being as a direct result of the loan book growth that we had. I think both Bank Windhoek and Bank Capricorn had good loan book growth, especially when compared to the local markets that we are in. And like I previously mentioned, Entrepo had a tough year, so their loan book decreased very slightly over the financial year. And the margins, that remain under pressure. You can see there the grey line being Bank Windhoek and Bank Capricorn on the red line. So Bank Windhoek, I think, did very well in protecting their margin because there were significant increases or significant pressures, especially from the cost of funding side. I mean, you are competing against government with treasury bills and bonds that are giving very nice yields. And in Botswana, for example, also got the same problem amplified by very low liquidity levels and inflation that hit 12.7% as at 30 June 2022, and it's even gone up a bit after the year end to 14.7, I believe, last month. Moving on to the non-interest income, I think this was a line where we grew significantly as the volumes started to pick up, so especially on fees where there was good growth, and on the trading side of things, on the forex, for example, we really saw a big benefit there with 112% year-on-year movement. That's about, and that translates to about 111.5 million. In Trepo, again, there is a slight decrease in their contribution there. As I have explained previously, they had some pressures on their loan book, which then directly translates to this, but it was also amplified by a significant increase in mortality claims during the start of the financial year, but still a very good contribution from them. CAM managed to grow their fees by about 3.7% year on year. There's also some big pressures on them to grow the books that they manage, as a lot of investors are now looking rather to buying the T-bills directly than going through the fund. But still, I think a very good contribution, and also a very good diversification of where our income is coming from. Moving on, we were able to maintain our costs very well, I think, with a 6.7% growth year on year. Mainly on two line items, which is the staff cost and the banking expenses. So on the staff cost, we had some headcount that we had to fill, especially in the information technology and cyber security space. So our staff cost did grow a bit more than the inflation rate of 6%. And on the banking side of things, that 23.4% that you are seeing there is mainly coming from increased volumes, like I mentioned on the previous slide. So we're not too concerned about that line item going up, because it does also speak towards more profits, because it is a direct variable cost. But for the rest, I think the costs were very well contained and well managed, and there is definitely a focus on only value-adding spending, and that we don't want to waste any resources here. Moving on to the liquidity, I think we really have had a very good liquidity position at both banks as at 30 June 2022, with liquid assets increasing by 14.3%, almost 15 billion for the current financial year. And then both Bank Windhoek and Bank Capricorn exceeding their liquidity requirements by 107.5% and 121.1% respectively. Our loan to funding ratio has also been the best since for the last couple of years, and it went down by about 1.4% year on year. So I think a very good liquidity position that we had as at 30 June, and we did that with our funding. A lot of cheaper funding sources that was grown during the current financial year, and I think that helped, especially Bank Windhoek, where their average cost of funding only went up by about 64 basis points year on year, while, like I mentioned, the repo rate went up 100 basis points, and the JIBAR rate went up 131 basis points over that same period. So I think they did very well in containing their cost of funding growth. Bank Capricorn's cost of funding increased by 119 basis points year on year, and there just is a lot of pressures currently in that country, and it's something that management is managing. But still a very good funding book. Bank Windhoek maintained their 30.1% market share on the deposit side, while Bank Capricorn increased slightly from 6.9% to 7%. Moving on to the credit quality, our loan book grew particularly well at 6.1% for the financial year, with Bank Windhoek contributing 4.7% growth and Bank Capricorn contributing a 7% growth. Now the 4.7% might not sound high, but if you look at it in the context that the market only grew by 3.4%, I do think Bank Windhoek did very well in growing their loan book in the current year, and that also shows in their market share that increased to 34.8% during the financial year. Bank Capricorn maintained their market share at 7.5%. And then we just need to mention as well the contribution of Payo Finance, who, as Tinus mentioned, only started operations during December 2021, and they contributed to the loan book growth just south of 200 million pula for the current financial year. So I do think that is a very good start to Payo Finance in Botswana. Now, looking at our non-performing loans, I think this is a very nice story. If you just look at the non-performing loan percentage of Bank Windhoek, that came down every single month during the financial year. So it was really well managed. And then on top of that, I do believe that we did see some better market data in Namibia, which did contribute to the lowering non-performing loan percentage. Unfortunately, in Botswana, we saw the reverse of that. There is just a lot of pressures currently in Botswana, like I mentioned, with the inflation rate currently at 12.7%. But it is something that management is definitely looking into and managing. And maybe just to highlight the slight downturn between May and June from 6.55 to 6.5%. So that does show that there is an active management process that's currently in place there. Our loan loss ratio also decreased from 1.07% to 0.85%. I believe it was one of the best ratios in the country until FirstRand came out of their results yesterday. So currently, I believe, but we are still in line with what our competitors has. Impairment charges came down by 17.2% to 367.3 million, and on a consolidated basis, NPLs came down from 5.2% to 4.8%. Just like to highlight as well here that Capricorn Group is as prudently provided for on bad loans as the standard does allow us to be. So I do believe that even with the 17.2% decrease that we had year on year, we still are prudently provided, and we're not without going beyond the parameters of the standards. All right, then moving on to the to my last one before I hand over. I did mention at the start of the presentation we have a very strong capital position, 15.8% compared to the 10% requirement set by Bank of Namibia, and both banks also have a strong capital position at 15.7%. So overall, I think a good set of results and a good statement of financial position that we are in as at 30 June 2022. So thank you very much. I'll then hand over to Berenice for the Bank Windhoek part of it.
Very much. My voice is going all of a sudden. But good morning, everyone. It's certainly a pleasant relief to sit in a room with people for a change. For the last 2 years, we were sitting in a very dark room with very bright lights. So it really is, it's so much better. So I'll start with, I'm just trying to get the system to work. Joannie, is it ready? It's not responsive to my touch at this point in time. Is it coming? Okay. Okay, thank you very much. So I'll start with an intro, starting with a macro context, a little bit on the operating environment, and then I'll hand over to Aune, who will take us through the rest of the presentation. Starting with the macro context, and I know I've got some seasoned economists here, so just very briefly, looking at GDP, we've seen moderate growth over the last year. Private sector credit extension, a key catalyst for economic reform, is probably still lagging. I think at some point in time, and I think as at 30 June, we were probably making up most of that private sector credit extension. And what we've seen is two factors, both the almost the reluctance from some clients from borrowing, and in other cases we saw industry-wide risk appetite tightening. And I think that's played into the low private sector credit extension number. If we look at the interest rate hike, we saw hikes coming through in quarter 3, accelerating to quarter 4 of our financial year. But what we've also seen is the lag effect, where South Africa has hiked their rates before ours, and there's a bit of a catch-up. And obviously, this is also playing into our cost of funding, because our deposits reprice before, or our funds reprice before our loans can. Inflation continues to be a challenge. As we've seen, it's trending upward continuously. If I also touch a little bit more on the rest of the external environment, sorry, the sounds a bit strange, but if I touch a bit on the external environment, and really in summary, Johan mentioned, we seem to be out of the shadows of the pandemic, but we're still seeing some of the aftershocks. And if we look at global growth is expected by the IMF to slow down. We are seeing increased geopolitical upheaval. Case in point is the war, the Russia-Ukraine war. We are seeing continued pressure on households as the cost of living continues to go up, and this is further exacerbated by the interest rate hikes that we've seen come through. Supply chain disruptions have affected us both on our IT equipment procurement front, but we've also seen clients where there have been delays in their business based on various disruptions in terms of supply chain. The weaker rand obviously does not help the situation right now, and I think we just continue to see some downside risk given the environment and obviously the rate hikes on a very weak foundation. Last but not least, all of the above is contributing to what we believe will be a prolonged impact on society. When I focus on our internal environment, starting with very positive news, this is our 40th year in banking, and we're very proud for the last 40 years to have been a homegrown bank that operates on global standards, and we compete with the best in our market head on. So that's definitely a feather in our cap, and that the fact that we've been a bank, a strong contender for 40 years, and we will be for the next 100 years. We've also, now coming back to the theme of we all believe COVID has gone. We pray that this is the end of that cycle, but we're still seeing some of the effects of COVID. And on that note, we've really had to continue supporting customers, much to a lesser extent, but we've had to, especially in this tourism sector over the last year, we've still offered support. And on the same vein, looking at the impact on society, and I think both Tinus and Johan have spoken to it, is our commitment to uplifting our communities, and in that regard, through our Capricorn Foundation, which Marlies heads, as well as our own social investment fund, we distribute 1% of our profit towards uplifting our society. We're very passionate about this, and we'll continue to do this going forward. In terms of staff, our key asset, it's also been important for us over the last year to continue assisting our staff. If one thinks for 3/4 of the last year, we actually still had the pandemic. So we've had to assist with special leave, we've had to assist by making sure that our environment is safe. So that has continued. And also, I think coming back to the I suppose the key core of our business, which is really the implementation of our strategy. And when we looked at that, the last year was very much, to some extent, if I can say that, was very much about almost making hay even when the sun does not shine. And we've had to focus on our strategy despite multiple distractions. And that's really resulted in us continuously driving enhanced customer propositions. We've continued to grow our customer base. Growth is part of our strategy, and we've had to focus. Tina's also alluded to the growth in customer numbers. And this is also evident if you look at our market share, both on the current account side, but also on the asset side. So remaining focused, making sure that we deliver full client value, that we capture full client value. I almost said climate. There's so much talk about sustainability these days. One is tempted to default to sustainability. But really making sure that we capture full client value, that even in these difficult times, we are entrepreneurial about opportunities, and we don't leave good business on the table. That has really driven us, and it's really helped us through the cycle. In terms of our investment in the future, when we enter difficult times, there's always a temptation to cut back on investing in the future. But given our strategy, we've been driving our investment into the future and making sure that we are geared for an increasingly digital future. And on that note, we are running a current digital transformation program which we call the hashtag Go Beyond program, and it's really, I think, the biggest investment we've made into IT and into technology, but we believe it's worthwhile. And we're already seeing some of the first fruits of our investment, starting with our mobile app. We've just launched our new mobile app. Tina spoke to it earlier. We're able to issue more releases more frequently. We've built a new IT platform strategy, which is really agile, and we're able to deliver a lot quicker. And we're also starting to see that culminate into the migration of transactions from our traditional channels to our more digital channels. We've also really, and this is the point about sustainability, sustainability is really core to how we do business. It's something we believe is integral to who we are. And on that note, we've enhanced our sustainability agenda in the last year, excuse me. And we've also launched our bond, our sustainability bond, late last year, in the last financial year. We've increased it in the current financial year. And on top of that, we've introduced a sustainability loan. We were also the only bank invited to accompany our government to the COP26 last year because of our pioneering ventures into sustainability. Now, on the topic of the dividends of our strategy, we started with, as I said, the launch of our new mobile app. And on the back of that, we've seen about a 245% increase in active users on our mobile app at the end of August. We've also seen a 100% increase in August of the value of transactions, and furthermore, a 75% increase in the volumes of transactions. And this is really attributable to our staff, who have been very dedicated and committed to ensure the migration to more efficient channels. But we've also focused on the management of cash, the cash value chains. The cash value chain, the costs that are often trapped in the cash cycle. And in that regard, and Tina's also spoke to it, we've introduced cash receiving ATMs over the last year, and we've seen, once again, the fruit of our investment, starting with the fact that as we speak, as of today and as we speak right now, 62% of our cash transactions on these devices are after hours. So we're starting to see behaviors change, and our customers are migrating to this new way of banking. But furthermore, we're seeing the average monthly value of transactions increase. And lastly, 50% of all our cash transactions are now being conducted on self-service devices. We're very proud of this because we've only had these devices for 1 year. And I think we're just so impressed by the resilience and commitment of our staff. Now, to take you to my next slide, and this is also my final slide. If one looks at our approach, what we've looked at, and there's so many permutations of digitizing, but our key drive is really not digitalization for the sake of it, but with a defined purpose. And when we look at that, we're looking at the migration of transactions from traditional channels to digital channels. And that starts with a focus on high volume, low value transactions migrating from traditional to digital, but high value, low volume, more complex transactions being retained in our physical channels, such as a branch. And that's really helping us in terms of the efficiencies of our business, just realizing efficiencies, but increasing customer convenience at the same time. So we really focused on that. Our future does not, we believe in digital, but digital does not necessarily mean branchless. And we're still very committed to our personal touch in the way we do business. Now, just in conclusion, just an example of what is possible. We've seen that, in this case, the example is airtime. We've seen that by introducing digital alternatives, we have not seen a reduction in volumes or a cannibalization of volumes. Rather, we've seen an increase in volumes, so a lot more activity across all channels. And this is really helping us with our increase in our non-interest revenue, is really being able to increase activity on the back of convenience for customers, but also on the back of efficiencies. Ladies and gentlemen, thank you very much. On that note, I'll hand over to Naone.
Yeah. Thank you, Baroness. I'm very proud of how you pronounce my name in these days.
Good morning, everyone. So when we look at Bank Windhoek results, what we actually try to sort of phrase them in two ways, or three ways rather. So which is the history, how have we done, and then how we have built for that next growth phase, so tomorrow. And then obviously the last one is sustainability of the business, something we always worry about. So when we look at this slide, profit we are very proud of. Johan mentioned it, Baronese also mentioned it, at 21.5% year on year, off the back of opening jaws, where you saw our income grow faster than our expenses. And obviously we continue to grow the balance sheet in order to achieve that and reduce the impairment. Then the other aspect now, which is as much as we must worry about today, is that what's for tomorrow. So we continue to grow the balance sheet. We continue to grow customer numbers at 5.7 year on year. And then we also worry about customer satisfaction at 77%, which is quite commendable. And then the other aspect is, which Baronese spoke to, is about investment in our technology to enhance our platform, become more efficient, with a 72.4% increase in IT capital expenditure. And then when we look at sustainability, which is the capital side of it, at CAR 15.7, and I think this one really speaks to how we thought of how do we manage the business in the pandemic, such that when we emerge out of the pandemic, it's from a position of strength, and that shows, so that then we can take advantage of the opportunities as they arise. So, I mean, the profit, you can see, is a record profit. You could see the impact, obviously, of the pandemic. I think Johan comprehensively spoke to this in Bank Windhoek context. And then on the loans and advances side, I don't like saying this, but it seems like we are market maker. We 4.7% growth, while private sector credit negotiation was at that 3.4. And what we then saw in the year is that the first part of the year, there was not lots of demand for credit from corporates. That probably at some point. When we talk about diversification of revenue from a bank perspective, we try to look at non-interest revenue versus interest. Obviously, most of you will know interest is capital heavy, and non-interest is capital light. And what is commendable is that we are now at pre-pandemic levels. You know, it's a great improvement, and it's something we will continue to focus on. How do we make more non-interest income so that we can create that excess CAR that we can then decide what we do with the excess capital. I think operating expenses, I think this slide really speaks to jaws, as we said. And one thing we do well here at Bank Windhoek is cost control. I mean, we do look at that 5.5% growth while we continue to invest relative to the 11% increase in overall income. And then obviously that then works down that level. I think 49.1, probably Namibia, probably market leading at the moment. Capital and ROE, and obviously now this speaks to future and how we want to get to that. So if you look on the left-hand side is our capital levels or capital adequacy ratio relative to end state capital. I use 12.5% and not the 10 because 12.5 is the end state. Once this bit 33 that relieves, I must almost look out and see what does regulation gonna come and then how do we fare against that. And at 15.7, clearly we are more than adequately capitalized. And then on ROE at 14.3, it is a recovery, but I think it's something we can do better at. We will continue to focus on that going forward. No, thank you.
Thank you very much to our panel. I received one question. I'm not sure who will be best positioned to respond. What is the reason behind the reducing NPL trend at Bank Windhoek?
Thank you. I'm comfortable. Oh, I almost took your mic. Sorry, Marlies. Yes, I think some of the speakers have touched on it, but just maybe to color it in a bit more. Definitely management, strict management and tighter management of our NPLs. We've introduced new structures within our NPL process. We've enhanced our pre-legal process. We're starting to introduce, and we started working with business rescue initiatives within the current legislation. So on the one hand, we focused on not only the inflow, stopping the inflow more proactively, but also rehabilitating before it hits the 90 days. And after we go into NPL, we've really stepped up our recovery efforts, and that's really helped us. So those are the three things that we've done.
Thank you, Berenice. So, are there any questions from our guests here?
Thank you very much. My name is Kaipa Helkanji. I'm a journalist for the NBC. Just one question on the digital transformation agenda. What is the implication on that on the traditional job market overall in the industry, as well as specifically for Bank Windhoek? If you can just share some numbers, please. Thank you.
Thank you very much. Yes, that is a key question one has to answer as you embark on this journey. And it really starts with, asking yourself about the viability and sustainability of the business and the ability to adapt the business where in an environment where market forces are aligning banks to a digital world. So we've had to look at the digital reality, the forces that are shaping banking, and we had to look at our current reality. So when we started this journey, we already anticipated, yes, that the introduction of digital channels will have an impact on headcount, especially in branches, because as I said earlier, we are we're migrating transactions, but we are also digitizing in branch. So we started with a very active reduction in terms of headcount, by managing recruitment, long before the actual journey kicked off. To the extent that in our current cycle, the impact is minimal. So we managed vacancies very tightly. We looked at new roles, and we critically evaluated the need for new roles. But we also see that at the same time, there's a need for new skills. And there's also an opportunity to upskill and reskill. So it's a combination of disciplined recruitment. It's a combination of the opportunity of insourcing scarce skills, but it's also about upskilling and retraining our current employees.
Thank you for your question. Any other questions?
Thank you, Julia from 91. Great results, so congratulations. I just have two questions. So the one question is on the market share for Bank Windhoek. I mean, good gains. Is there a level that the bank stops being comfortable? What is that level on the advances side? And then the other question is, what is your current cost of capital, and how is that being managed, given where ROE currently stands? Thank you.
Yes. Okay, I'll give ZK the cost of capital one, because he's very passionate about it. We can hardly buy tea, then he calculates the cost of capital. So in terms of market share, yes, we've asked ourselves the question, and at what level do we get uncomfortable? The reality of market shares, it's not just dependent on what we do. So it's very difficult to actually gauge. We've looked at a level of, I think, between, I suppose, 33 and 35 as a level that we'd like to play in. But it's not, so if our competitors suddenly increase their market share, by default, ours reduces, if they increase at a faster rate. If they do not lend, and we've seen that in the last cycle, as much as we think the market, at least as much as private sector credit extension, then that has an impact on us, and our market share shoots up. So at the same time as we're looking at a range, it's not entirely within our control at all points in time.
On the cost of capital question, maybe I will try to, most of the asset managers, I'm sure that you guys do this. So we started, is it 2 years ago or so? We calculate the cost of capital using the capital asset pricing model, like most of you guys. And then we use the risk-free rate looking at maybe 8-9 year horizon, because that's a normal investment horizon. So currently our cost of capital is around, for the new financial year, so we reset every year. It's about 15.02% for Bank Windhoek. How do we manage that is, it's what Baroni said. Even when you buy tea, I ask, what is the return on capital? But on a more serious note, then how you manage that then becomes how efficient are we at in everything we do. So when we put a deal on the book, when we will look at is the deal above cost of is the return above cost of capital. If not the deal, is the relationship above cost of capital. And it's almost like that's in everything we do. If we get to the cost side, and I know my COO is here, every time he wants to spend money, I say, if I give you $1, are you bringing 2? So as you embed these practices, then you will see that ROE trending up. But I think the real game changer will be growth in NIR as we build this platform that is stable. And then, you know, when you start onboarding clients, but there isn't the related marginal cost increase, then that ROE will shoot up.
Thank you. Another question?
First off, I want to say thank you for the presentation, and 40 years for a proudly Namibian company. Well done. My question would be, and it was a good chart, Jan, with the Kavmon Bank and the pandemic, to just see the difference there. So I guess you guys retrieved a lot of good lessons out of that experience. I know it was a painful one. Maybe if you can speak to strategy going forward, how you will apply, what you're looking at, and then also in terms of Basel III readiness and preparedness, if you can maybe comment on that. Thank you.
Okay, I can take the strategy one, and then one can maybe talk to, or ZK to the Basel III part. Yeah, it's